All right, I want to do a mild departure. This is a private video here for me to remember what happened today. Today is a second day in a row where I performed poorly, very poorly. But it wasn't because I didn't know how to see the potential for the high time frame movement to happen. I just got confused and I want to talk about that for a few moments. If I can talk about that, I can memorialize it. If I can memorialize it, then I can look back and see milestones of growth. So, the very first thing I want to cover and focus on here is the plan for the day. I said if the bulls are in control, we should see 60 should hold and 72 should break. If the draw is to 4,200, which I thought it was, I'd like to see 72.50 taken out in the 5 minute and leave a fair value gap. If the bears are in control, 72 holds, we take out 62, we could see a move lower. There's been a bullish market structure break. However, it's unclear which time frame represents control. Now, I want to talk about that specifically because something happened this morning that hasn't happened in previous days. And that is, due to watching an ICT video last night, I was reintroduced to his market structure ideas about high time frame pivots, highs and lows, intermediate time, and low time frame. And so I tried to implement that knowledge immediately and made a mistake. I walked into this morning and was confused about the things that I saw. Roughly when I walked in the morning, we were about there. And I'm looking at this and I'm panicking and I'm going, oh no, where are the pivots? Well, every fair value gap that, and this is again misapplied knowledge. I'm going to have to go back and watch the video. But every time a fair value gap is rebalanced, he says that's an intermediate low. Well, that makes that low here a low, and that potentially changes the narrative. Well, in my mind, I conflated potentially changes the narrative to actually changes the narrative. The narrative for this week has been bullish after Wednesday. Wednesday, we put in the low, and I've shown that slide. I've talked through it, and clearly from Wednesday on, the narrative has been bullish. And this price, 42.01, is what I wanted to see tested, and you're not seeing any of this because I wasn't showing it. So there's my plan that I had before, and then now I'll just go to the charts. So just backing up a little bit, any pivot that rebalances a fair value gap is an intermediate time frame, low and high. So that's that. Well, is the market going to decide what it's going to do between here and here? Well, I wrote that as a part of my plan based on that knowledge, but it's really not. I mean, if we're going to go down, we're going to need to break the overnight low, aren't we? Yes. Is there a fair value gap ahead of that? Yes. Is there a pivot ahead of that? Yes. Are there several pivots ahead of that? Yes. Okay. So where are we most likely to go if we're going to go higher? We need to go lower to go higher. If we need to do that, where would we go? Well, below midnight's a good place. Below the 8:30 open's a good place. So, is midnight here? Where is midnight? It's at 54. It's right here. Okay. Where is their fair value gap around the midnight open? Well, there's this one here, and then there's this one there. We got two opportunities potentially to get long. Here's the Globex gap low on the day time frame, so I'll show you what that is. See it? So that could hold on the first test and coming back down. So what happens? Well, here's the thing. And this is what I think from a process standpoint that I didn't really work from. You have to focus on, first of all, your execution time frame. Think from the 5 minute. I don't want to wander when I start saying this because I'll quickly make up rules. But my support and resistance time frame, my narrative time frame is the 60-minute. So let's look at the 60-minute. I don't know what that was. Okay, and see if we can determine where the short and intermediate time frame highs and lows are. Let's just go through them real quick. Well, there's one. There's one. There's one. There's one. Okay, so let's just mark them out. And I'll do this rapidly. And why are they one? And that's not one. I mean, it kind of is, but it kind of isn't. It kind of looks like on the lower time frame, it really looks like just a relative equal low, and that is a relative equal low right there. So realistically, your first intermediate time low time frame is there, making this most likely this and this, somewhere between this and this, your high time frame. Okay, so if that's an intermediate, then the next one would be a high time frame. That breaking back below 32 would change the entire narrative on the day, for sure. And my narrative was breaking below 43 actually changed the narrative. I didn't say in my plan, I said 60 should hold as the intermediate time frame low of the session of the 15 minutes. 72 should break. Okay, well, 60 didn't hold. 60 did not hold. But on the bear side, I said, I guess I didn't write down. I did put my high time frame levels as 43 quarter on the low side. There it is. And 89 quarter on the high side. So that 89 quarter was my target on the top side, and 43 quarter was the invalidation point of the long and potentially the target. So there they are. Now let's just go back. I know this video is it's already starting to take too long. But here's what happened, and this is the part that this is the part that really frustrates me in terms of what I did today. I looked at this tiny little gap, and I've seen tiny little gaps work before, so I took that here. Okay, and then I took it again right down here somewhere, right there. And then I did not, right there, because I let it take that out. So I took it right there. So I took it here, and then here, and then I did not take it there. And I want to point something out. I want to point something out that's sort of dastardly, something that's very annoying, something that I was not working from. Okay, now that we've got that all spread out, I'm going to go back to my 1 minute time frame and say, let's break down what's going on. What has happened? Number one, narrative. What is the narrative? The narrative is long. Do we have a market structure break on the 60-minute? Yes, we do. Okay. Is that in alignment with the narrative? Yes, it is. Okay. What has happened in the overnight? Well, we had a long run up, and we have tested. We were currently, actually, let me bring this all back so we get to what I was looking at. We were currently testing high time frame support. So we did expect this to hold. Don't know about this, but certainly expected 56 to hold. So as you're looking at this, you go, okay, well, where is the order block on 56? Well, it's all the way down to 55. And then where is the order block here on this bar? It's at 47, 49. Okay. So if we're going to get long, those are the areas we should be thinking about getting long from. Now, let's come down a time frame. So that's 60. 15-minute, the same thing that's here is also here. So all we really need to focus on now is the 5. Let's see let's roll this forward and see what happens. Okay. Do we have any market structure break here? Well, you could argue that this one is, and that doesn't hold. So it's taken out. So should we have taken this long here? Abso-fucking-lutely not. Okay. So then it comes down. So if you wanted to buy 55, do you have a market structure break to buy that off of? Nope. Nope. Not here, you don't. Okay. So, what price does it go to? 47.50. 47.50, you say. You mean 2 ticks inside of the open of the order block? Interesting. Interesting phenomenon. Okay. So, we don't get it. What happens? What do we do? What do we do? Well, what happens? Since the 60 and the 15 align with each other, and the 5 does not give us what we're looking for, but we are at high time frame support, what do we see? We see any structure break here? Nope. Okay, let's get down to, let me bring that back. Sorry, I want to do this. Get that price on there. Okay, there's our order block. Do we see a structure break here? Do you see it? Testing the order block. High, lower high, higher high, lower high. Are you seeing it yet? There it is. And do you have an order block on the 1 minute that has a fair value gap? Right there. There's your entry. Click. Where's your stop? Right there. That's below the order block. 1 tick below the order block. What was the failure in the process? What you did is that you trusted this down structure, which was against the narrative. Against the narrative. Is it bearish? Well, yeah, of course it is. All buying is going to look bearish right up until the point that the buyers show up. It also was the first test. By the way, check this out. This here is discount, and this is extra discount. Okay? So even if you say, well, maybe this makes sense to buy, or whatever it was, this one. I think that's where I bought. It works up and then it stops working. Okay? Then the second trade is a little bit more difficult, I think, than that one in terms of what to do. Number one, you have to know where you're drawing to. Where are you drawing to? Well, I think we're drawing to 89. But are we going to take all that risk back into this trade? Absolutely not. So you get into this trade, and I think it's reasonable. Yeah, you don't even make that. So I don't know how you get out of that trade, but you could say the London Open is a worthwhile place to scale. But regardless, it doesn't matter. I'm not worried about that. You get out of this trade once you see that pivot right there has been broken. You got to pivot, and then it's broken with a split, with a displacement. You're out of that trade. And I'm not worried about whether or not you could short. It doesn't matter because the bias and the narrative is long. And so that gives you plenty more opportunities to get long. How does it do it? Well, you're back into premium again, or discount rather. And so do you have an order block with a displacement? Yes, you do. Boom, right there. You get filled. And then now, because we already expect we're going long, we can play this structure here for any new lows in this order block, and we just use this like pipeline. We can do that. Now, why don't we need another displacement? Well, the bias is already long. So all we really need to do is say, well, at what point are we in premium or just discount rather? So anywhere below this, could you have bought that? Yeah, all of this is, potentially on the table. So what prevents you from buying it? Well, nothing really. I mean, but you have to be aware that any of this is buyable. So you've got to be, you got to deal with that. So let's say, for instance, that you wanted to wait. You say, well, man, this is a big retracement. I don't know. It could just keep going. Well, what will you do? Well, it's real simple. You will just wait for it to go up again and displace again. And where does it do that? Right there. And where do you buy? Right there. I bet you dollars to donuts, that's the mid of that bar. And it rolls up and it tests again. It doesn't hold. And now you have an intermediate high because it rolls down. 1, 2, hold it down. That's going down. Down she goes. And can you buy this again? Yep, we still have this order right here waiting for us. And where does that go? Right to our target. 89 was our target, and that's where it crashed through. Is this easy? This is not easy. No one said this is easy. Nothing about this is easy. It takes a long time. Everything takes a long time. The market moves slower than you want it to. You have lots of desire to get out. And nothing ever goes exactly the way you're hoping it will. But some of that is due to the fact that you don't really know this process very well. You have made assumptions about certain things and you are not clear. You're not as clear as you think you are. So with today, I was trying to really get clear. And I wanted to bring out my intraday model. So here it is. See if I can do this. That is not working the way I want it to. Okay. My intraday model. Here we go. So the prime rules you can read here. Swinging only with the narrative. Everything else is half size and a scalp. If there has not been a scale out, then there's no management. Can't move your stop. It's either exit or stop. We do not fade a move that has a recent liquidity takeout, which means if we get, if we're buying something, then, it can't take out the high and then come back down to us. That we don't want that. Let momentum slow down. If you get a bar that's racing at you, you don't got to buy the first touch. It's going to go a little further. Usually, you'll find a way into that. The lower time frame market structure shift at high time frame fair value gaps should be traded if it meets the narrative. If there's no pivot being taken, then use a secondary pierce of that level. If there is a pivot being taken and the 5-minute risk is within tolerance, you can take the first test on the 5-minute. A lot of these 5-minute bars lately have been like 3 and 4 points. That's been totally within the risk rate tolerances of what I'm used to doing. Swings, as opposed to scalps, are from premium if we're going short and discount if we're going long. If it's not that, then it's a scalp. Now, we can get a big scalp, but it's a scalp nonetheless. If you cannot invalidate the market direction, you cannot trade, which means we have to clearly see where the intermediate time frame highs and lows are on my time frame, and they need to be in alignment with the narrative. They need to be in alignment with the 60-minute. They need to be in alignment with the executions. Otherwise, don't trade. Ideal scenarios for the week, and I'm trying to plan for the entire week. I'm trying not to just trade every day as if it's its own entity, because it's not. Mondays are a scalp day or no trading at all. Like this Monday was a really great scalp day because you got a pretty good move right off the open that ran a pretty good distance going into Tuesday. Tuesday, we should get some sort of swing from premium into discount or vice versa. I could bring up what happened this Tuesday. And in fact, as a part of this video, I will cover what's gone on since I just covered what happened during the day at the front part of this video. I will cover Monday, Tuesday, and Wednesday as a part of this video as well, just to lead you up to it. Wednesdays, we should be seeing the higher low of the week, and we want to swing into a previous high or low if a purge and revert has occurred, as it did this week. Thursday should be a continuation of Wednesday's move, as it was today. Friday could continue, but if the weekly target is met and the account objective is met, we watch. My market structure is based on the 60-minute time frame, old highs and lows and dealing ranges, and fair value gaps are my high time frame support and resistance. The 15 and 5, I want them to agree. I don't care so much about the 15. It's just less pivots, I guess, than the 5. But I'm looking for the fair value gaps, the intermediate highs and lows, and the short-term highs and lows on those time frames. That's giving me my entry locations, my stop locations, and my targets. My execution is on the 1, 2, and 3 minute bars. Entry is based on the localized pivot purge or the second pierce of a fair value gap on the execution time frame. Stop is the higher low of the bar directly previous to the fair value gap. Partial invalidation is the accumulation being taken out. So if you get in and you get an accumulation bar, what should be an order block, if we continue, then if we get some form of continuation and it gets taken out, then that means the trade's a failure. Prior to weekly bias being set, so like Monday, Tuesday, we're looking for purge and revert on the 5 minute, and we're looking to take out the previous 3 pivots on the 5 minute market. That actually happened today on the 5 minute market. I'll show it to you. All right, you've already seen it. You'll know what I'm talking about when and if you ever review this video. We're looking to take out the previous 3 pivots in the 5 minute market structure range or a clean level. So if there's a relative equal high or low, then we want to take that out. And obviously we're looking for the optimal times of the 8:30, 9:30, and 1:30. Channeling away from high time frame fair value gaps. Now this is the situation where there is no purge. We don't take out any stops. It's just channeling higher, channeling lower. We can trade that if it works inside of our time frame and it fits the narrative prior to the weekly bias being set. And here are the goals, as you can see them already. Now, once the weekly bias is set, we're really looking for that Tuesday, Wednesday purge and revert on the 60 minute. And then we're looking to take out the previous 3 day time frame pivots, as we did today, and structure the pivot structure or a clean level. I don't know why I say that. Again, optimal times 8:30, 9:30, 1:30. May happen Tuesday or Wednesday. And again, as what happened today, channeling away from the high time frame fair value gap on the 1 or 5 minute. It happened on the 1 minute and not the 5 minute, which is what induced me to the short. We covered this, but I was induced into taking shorts because I misinterpreted the market structure being broken to the downside, and so I started shorting, thinking that's what was going on. I was shorting, really, quite frankly, in discount. Why would I do that? Well, I lost sight of the plan and just started executing blindly like a computer that is just taking the first opportunity that comes at it without any other context. Now, my execution is at the high time frame fair value gap. And when it is at the high time frame fair value gap, you do not need a purge. But if one occurs, you're going to want to be in a PD array and wait for the market structure shift and the fair value gap to appear at least on the 1 minute time frame. There are other circumstances where I think waiting for the 5 minute would be best, and that's if, say that you've had, maybe it's 10:30 as an example, and there's been a lot of back and forth and there are no fair value gap bars on the 5 minute. We're basically balancing. And so you want to wait for the 5 minute to show it before you actually trade the 1 minute. Don't take the 1 minute just because it shows up. You've got to see that in the context of what's happening in the 5 minute. And the overnight could be balancing. So for that matter, it doesn't really matter what time frame it's on. What we're talking about is the first test of a high time frame fair value gap. That's what we're talking about. Anything else is something different. And once it appears, you take the first test of the price. So how do you click the button, or when do you click the button? If there's a local pivot, even if it's above the fair value gap, you can take the first test of that 1 minute fair value gap, because we want to take stops. That's what we want. Somebody put their stop there, and I want to buy from. I want to take that. So if there is no pivot, we can wait for it to be tested, but then we want to take the next push into the higher low of that pierce. That's the entry. If the price needs to push through, watch for closes beyond the fair value gap. That's a sign of invalidation. If the price moves away and leaves accumulation candles, they should not be violated. If you miss the first move, then buy the mid of the first reversion bar, which means if I bought, that would be a bull bar, the mid of the bull bar that went, that lifted off the price. And if you missed that, buy the first accumulation candle on close, which in the case of a buy would be a bear bar. In the 5-minute price range or dealing range, we're always looking for a swing that's in the narrative. Otherwise, look at if the narrative changes. That's the next slide's coming up. If we're looking for a purge and revert that takes out the relative equal lows, we're going to do that at 8:30, 9:30, and 1:30. If that purge is testing into a fair value gap, you can follow the rules on the previous slide. If that purge is not testing into a fair value gap, then you must wait for the market structure shift and an order block and a fair value gap to be put in. So no matter what you do, no matter what the purge is, if there's a purge, you have to see a market structure shift. There's no point at which we are taking the first test of a fair value gap unless a market structure shift has already occurred. So think of that this way. If there is a market structure shift, then we can take the first test of a fair value gap. But when the market is sort of just, and I'm on the buy side because that's what today was, but when the market is just descending into a fair value gap, we're not taking fair gap, we're not taking gap after gap after gap. We're not doing that. We have to see a market structure shift somewhere first. Otherwise, that test is invalid. It's just sort of doing an endless pullback. If the gaps appear on a higher time frame, though, but not on the next lowest, like if it's on the 60 but not on the 15, just follow the 1 minute. Use a PD array to ensure optimal trade location. And in situations where there are multiple 1 minute gaps, just bump up the time frame. And you don't need to wait for the 1 minute close or anything like that, or the 3 minute close. Just any test into that fair value gap will be fine according to the rules. As I described here in the click the button, which is the same exact thing as I said on the previous slide. Now, if the narrative changes, in this order, we should expect order blocks to stop holding. We expect the intermediate time frame pivots relative to the daily midnight open to be taken out. And we should expect the high time frame pivot to be taken, or that we would balance. We don't want to be shifting the narrative because of the 5 minute structure, which is what you're typically doing, or the 1 minute. That's typically when you get zeroed in, that's what you're doing. And then you focus on the logic that you know the best, which is your execution logic. I got to say, your execution logic is freaking perfect and flawless. Your abilities are very good. Where you get screwed up is you get screwed up on context. That's your problem. You're too precise at the point of execution and not precise enough and not disciplined enough in the context. If we can solve this, everything changes so dramatically. Swinging versus scalping. High time frame gaps being tested and market structure shift occurs with bias or after a purge and revert. So that's where we want to swing. We're scalping, 5 minute events like channel tests and failures, balance area breakouts, 1 minute events, market structure shifts at highs and lows, and premium discount arrays. So like what we're talking about here is, when you have a big long run into a higher time frame fair value gap and you start to see it channeling away at the high or something like that, that's a situation that we can scalp it lower even though the narrative is long. Potentially. I'm not too interested in focusing on that in this early run, but that's certainly possible. Invalidation. Total invalidation is order blocks not holding and the higher low of the bar behind the fair value gap being taken out, or narrative invalidation. Now, you cannot take the gap execution process by itself. Without the narrative, it's a guaranteed stop. You have proven that to yourself over the previous weeks, and then again today with live capital. Here's an example of weakness in invalidation. The higher low of the fair value gap bar being taken out, that's weakness. We don't like that. Closing beyond it, that's not good. And then multiple tests in the same swing, that's also not good. We don't want that. We should try and get out of trades that are doing that. Execution with a limit order. When the market has given us a level and a swing, we set limits at levels we expect to be broken. Second and third tests are highly desirable. Expect, and that's pivot tests, not in the same bar, not in back-to-back bars. Now expect the market to need expect the market to need 3 more micro tries before it continues to its next location, which means, I have this tendency to believe that once I get in, it should just run away. Well, it usually doesn't do that. It's usually got to bounce around for a little while before it goes somewhere. And I've noticed that the market works in a pattern of threes. It tries to get higher 3 times, and then once it can't get any higher, it tries 3 more times to continue to attack that level. So do not move your stop until you've scaled out. And ignore the stop market order stuff. That we're not going to do that. The goals are 10% growth total account per week. We're going to risk 1 to 3% per trade, no more than 10% loss per week, which happened today. Happened this week. And then the process involves what I'm doing right now, which is a daily review of process mapping, 100 fair value gap setups documented, perfect execution of 4 to 6 swing setups per week. Utilize the joshbarnes.net Trader's Mindset app, which I did today, and no process errors and timeouts when I do have a process error. Right now, it looks like, if I make 2 mistakes in a trading day, I'm just either done for the day or definitely done for the afternoon. Until the afternoon, because there's just no reason for me to keep pushing. I should not be taking stops like this. I'm good enough that I really should not be taking back-to-back stops. And then if I take like a mediocre setup, that's not good. I'm obviously doing something wrong. So let me just get to this week's action. Okay, you can see here's Monday. We had a scalp down, moved down pretty handily, and then we balance on Tuesday. And here's what Tuesday looked like. And by the way, we just go back to that for a second. We're expecting this to be purged, maybe even that. We're expecting this to be purged. So on Tuesday, what happens? Well, we have a big dealing range. We walk back like this. We don't break any structure. We test lower, break structure, pull back, and then make it into the highs. And then we come all the way back and then go sideways. So, the thought was probably we're going to get down here and take that purge out. And we're all the way down deep into discount. Look at this. We have discount on the dealing range and then premium and discount. Look at where the midnight open is. So selling anything above midnight, probably a good idea. And then buying anything below midnight, probably a good idea. But where is your market structure shift on the 5-minute? You don't see one. We get all the way down here to the high time frame support. Do we even get one there? Let's have a look. Nope, you don't. You don't get one until here, which is where I took the long, and I wanted to take it up into there, and I wanted to take that short. So I got that long and should have covered it, but I didn't. I took this short, not in discount, not in premium, but in discount. So there's a mistake. Bunches of mistakes. So many mistakes. Okay, and then let's look at Wednesday. So what happens Wednesday? Well, remember the plan. All right. There you go. You've got your purge. Do you have a market structure break? Yes, you do. There it is. Here you have another one. You have a purge, another revert. There's your market structure break. There it goes. It runs higher. So here we see stops run out. That is invalid. So the only valid location is right here. Where's our midnight open? We're way above the midnight open. Do we even get into any discount? We don't get to any discount at all. But we do have a sympathetic New York low and a sympathetic Globex low, indicating very likely that we're going to go higher on the week. All right, here's your 5-minute bars And here's one of those situations where you go, okay, wait a second. Do I buy this on first test? Why would you buy this on first test as opposed to other situations where you don't buy on first test? Why? Is there one reason? Is there any reason? Market structure shift is underway already. It's already happened. So taking out this stop it's not confirming the short. It's not even setting up a short. It's taking liquidity to run higher. Do you see that? So then you'll look at the 5 minute or the 1 minute. Here it is. There's your purge. And unfortunately, in this situation, you can build this all out. You could have taken that on the first test because the market structure, it already existed. But even if you didn't, even if you waited, where in discount do you see a fair value gap? Is there one? There isn't one. Where's the first one? Look for it. It's right there. That's the first one. And it has an order block with a split on it. And it has an order block here with a split on it. I keep wanting to call it split. It's a displacement. And then that runs up, comes back, and then, does what it does. Could get short here, high, short-term high, another high, and then lower high. Here, see that? Boom, 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 right there. There's your short, down into here. Anyways, so that was Tuesday and Wednesday, Monday, Tuesday, and Wednesday. So I know this is a long video, but I'm covering all of that because the problem is not your ability to see the opportunity. The problem has been your ability to maintain focus with what the process is for trading the opportunity that you see. That's the biggest dilemma that I see right now. That is the biggest dilemma that I see right now. So now let's go back one quick thing. Do you see a market structure shift here? Well, yes, on the 1 minute, you definitely do see a market structure shift. But are we in premium? Yes, we are in premium. So do we want to buy in discount? Yes, we want to buy in discount. Where? On the 1 minute? No, not on the 1 minute. Although it does kind of hold for a little bit. No, we want to do that where it makes sense for the whole day. So this is a video that I think you should study and continue to recognize that you're making progress, and wanted you to have this to look at later on.